All right, guys, welcome back to the channel. I've got a very special guest on today for a solid interview we've got coming up. It's Jason Shapiro from Crowded Market Report. You can find him on YouTube and on X. I'll leave his details in the description. I'll just say a quick good morning or obviously good afternoon to you over there in the US. How are you, mate?
Good, man. How are you?
Doing very, very well. Thanks for jumping on and introducing yourself to my audience. I've pointed you out a few times before to the guys on my channel. There's so very few real traders on YouTube, and I think you're sort of figuring that out now in your older age, getting on into the game. But I'm glad that you're here to bring more of your wisdom into the space. A lot of people complain about all these idiots on YouTube, and it's like, well, then you get someone good. I think they should listen. So thanks again for jumping on.
Yeah, no problem. Happy to be here.
For those that don't know who you do, what you do, I found you from Unknown Market Wizards, which is a book that Jack Schwager put together. It's a series he's been doing since the 80s. So if you are interested in trading, investing, definitely check these books out. But just a quick rundown, your elevator pitch, what you do, how you got here.
Yeah, I'm a futures trader. I've been trading. I'm 56 now. I started trading when I was about 21 or 22. I started trading professionally 10 years into that. So let's call it 22, 23 years ago, I started to manage money and have been sort of managing money in various capacities ever since, working for hedge funds, having my own hedge fund, which is what I do now. I am a futures trader. I have traded a lot of equities in the past, but the last sort of 15 years, I've been pretty much exclusively a futures trader. So I'm a registered commodity trading advisor, and I have some institutional accounts that I manage, and that's what I do.
I might break it back just one step. If people don't know what futures are, do you mind just quickly running through that? I know it sort of might be a bit basic. You've been doing it for 30 years.
Yeah. I mean, a futures contract, it's just like anything else, truthfully. It's just an asset that, people try to make things too complicated. It's just an asset that either goes up or down in price. They have them pretty much on anything. But I always tell people, look, it's just a thing that either goes up or down, just like a stock or anything else. And you're either betting that it's going up or you're betting that it's going down.
Speaking of that, speaking of your service, understanding your trading style, because obviously on your website, YouTube, it's about contrarian trading. How do you trade that? What does that mean? Can anyone do that?
Sure. I mean, there's a few ways to look at it. One way to look at it is a very simple way to look at it is this. The statistics show that somewhere between 95 and 97% of people that get into trading lose money over time.
Lose all of their money?
Yes.
Yeah.
Well, lose money. I don't know if they lose all their money. They lose as much money as they're willing to lose, right? But they lose money from the day they start trading to the day they finish trading. Their P&L is negative. So if I can just take the other side of all those trades, then I make money. It's really a simple.
That's what the crypto exchanges are doing, I think.
Yeah, but that's this very simple way to look at it, right? But from a more, I guess, advanced way to look at it is the concept of the market is a discounting mechanism, right? Which means what's in the price is all known information. So how are you going to get an edge, right? Without having insider information that nobody has, which is illegal, and you're going to go to jail. So that's not going to help you out, right? Mm-hmm. So how are you going to get an edge, which is what making money over time is all about. You have to find an edge that you can take advantage of time after time after time, right? And that edge doesn't always work, but if you're doing it right, it's just like counting cards over time. It should work if you're staying disciplined and doing it the right way. So how do you get that edge? And to me, just what makes sense to me is by being super against the crowd is what gives you that edge, right? Because people think that they're going to outthink the market.
They're trying to do too many steps ahead.
Yeah, well, they think they're going to outthink it, and you're not going to outthink the market because the price of an asset is all the information that everybody in the world knows already. So how are you going to outthink that? I always say, like, you might be the single smartest person out there, but that's not enough because you have to be smarter than everybody else combined in the market if you're going to try and outthink the market. And that's clearly impossible, right? So if you're not going to outthink it, where are you going to develop an edge? And for me, it's this contrarian thing where if everybody's thinking one thing, right, then you start look at going the other way and being contrarian against that, right? Doesn't mean you do it automatically. You wait until the market sort of confirms what you're thinking, as with any trading style. But that's kind of how I approach it. I try to measure where there is massive positioning in one side of a market and massive psychology on one side of the market. And I start to look to go the other way because I think that's where the risk reward is. Because if everybody thinks one thing is going to happen, and that's in the market already, if that thing does in fact happen, it's already in the market. So it's not going to have a very big move. Whereas if that thing does not happen, then there could be a huge move the other way, right? And that to me is what trading is, lose a little, make a lot, lose a little, make a lot. Less than 50% of my trades make money, but the ones that I make on make 4 to 5 times more than the ones that I lose on, To me, it's just like flipping a coin, right? Heads, tails, heads, tails, heads, tails. Except if I could get paid $4 for heads and only pay $1 for tails, then I want to flip as many coins as I possibly can. It's not going to change the odds of it being heads or tails. It's going to be 50% heads and 50% tails. And sometimes there's going to be a run. I'll bet all heads, and sometimes there'll be a run of 6 tails in a row, and I'll lose money 6 times in a row, right? But over time, if I'm getting paid 4 for heads and paying 1 for tails, that's what trading is. That's what making money in the markets is about. So how do you get that 4 to 1? To me, it's by taking a very contrarian outlook.
Is that a short-term outlook? And can you say whether it's daily, weekly, monthly, or is it a longer term?
It's usually longer term, few months. My trades usually last 6 to 12 weeks when they win.
What was a recent example?
You can see here, this blue line indicates that people are super long, right?
Mhm.
So they're super long cotton. And the news, obviously, this whole way up is all bullish cotton, bullish the plantings, and all this stuff is all bullish, right? And then suddenly you get, it was actually this day right here, you got a super piece of bullish news. You can see the market went up and closed on the low and closed down on the day. So I get short right there. That's the market confirming and it's no longer going up on good news, right? So I'm risking the high of the day. So I risked that much from this day where I got short to this high. And we rode it, and I got out somewhere down here when this stuff went neutral, down here. So you could see I risked this one day, and I made about 7.5 times what I risked. So if I lost $1. And if I made $7.5. And this trade, this has not been this calendar year for me, has not been a phenomenal year. But this one trade alone, made me 7.5 times what I risked. So I'm having a decent year now just because of one trade. And it takes me, if I get 3-4 trades like this in a year, then I have a great year.
As you said, when it comes to your strategy, if you're risking 1 on the losers and then hopefully to make it 4, 5, 6, 7 times.
Mhm.
So would you say that could potentially be an entry point as well, but it went higher, so you got out there and then you re-entered again the following bar that you got into?
So for me, there's a lot of random movements, right, in the markets. They go up. Good news comes out, it goes up. Bad news, it goes down. Good news goes up. Bad news goes down, right? And I don't want to get caught in that, right? Well, the way that I do it is there has to be a piece of good news to come out and then the market not to go up. I call it news failure. And it's a pretty classic trading technique, but that didn't happen on this day. This was probably a bad news day, which is why the market went down, which is why I didn't get short. Look, and I went back up. But on this day, there was some very bullish news that was released. Planning report that was very bullish. The market went up, failed, went down. So there, to me, is the signal to get short. And I encourage people, no matter how they trade, if they're buying breakouts, if they're whatever they're doing, they should always wait for the market to confirm what they're thinking before they do anything. Fighting the tape just because you happen to think something is the most expensive thing there is, right? But who cares what you think? The market is what matters. The market will tell you when the time is right. You just have to be patient and let the market tell you. So on this day, the market told me. Now, doesn't mean it couldn't have gone up and stopped me out. That happens to me all the time. Okay. But, the market tells you, and that puts the risk reward in your favor because now the market is no longer reacting how it should.
I think I've heard, whether it was yourself or my brother or someone else I was looking at trading, to say, let the market prove the move.
I like that.
Low. Yeah, it's not bad. Hey, prove the move. We look at it like a first lower swing top for my style of trading. because you had the top and now you got a lower swing top. The news is still bullish, but it's just not following through. And you see this all the time with Bitcoin and cryptos because it's how highly emotional it is. I guess that then comes down to how do you decide which news is important to look at to give you the signal as opposed to not important? Because that would be a massive one that new people would not understand. Like, how do you take that signal?
It's hard, and unfortunately, I know people don't want to hear this, but it takes experience. You know what I mean? Just like anything in the world, right? I mean, you live on the Gold Coast, you want to surf, and nobody's jumping in the water and becoming a professional surfer. You know what I mean? You have to go and surf and take your hits, and you know what I mean, get thrown around in the waves, right? And get whacked a little bit before you can become a great surfer, right? But for me, at least with the news thing, I always say it has to be obvious. If you're questioning it, then don't do it, right? This particular news day on this cotton thing was a hugely obvious news piece, right? It was the big day that they were doing all the grain reports and all the grain import export numbers, and it was hugely bullish. And the thing after the news came out midday went straight up, right? So the market was saying it was clearly bullish, and then for no reason at all, it failed and closed down. If there's question, I always say this to my guys, because this is a big thing, obviously, that we talk about on our Discord all the time when people are trying to figure out these news failures. Was this a news failure? Was this a news failure? I'm like, if you have to ask, then it wasn't. You know, it's just that simple. It should be freaking obvious. And for me, I'm starting to follow when it starts to get super crowded. That's really when I'm really paying attention to it. And I start to pay attention to what has been driving everybody to get so long, what's been driving everybody to get so bullish, right, in this particular market. And therefore, that's the news that I'm following. Is it a planting thing, or is it, in the financials, is it an interest rate thing? Is it an inflation thing? Is it a growth? What is really driving it? And I'm listening to the participants talk about what's been driving it, so that then I can know, okay, the market just gave them everything they wanted and it failed. So there's a trade for me.
Would you say then you're a fundamental trader, or is it a mixture of both with some of these technical?
Well, I'm not trading the fundamentals in terms of, I'm actually trading the anti-fundamentals, right? I'm following what other people are using as the fundamentals so that I can know when the market fails on that fundamental, right? I mean, markets, I'm picking turns essentially in the market. Now, on this one, we didn't get the turn, but we got a pretty decent part of it. We're off the highs. Usually it'll be on like days like this, most of my trade, right? My winning trades will happen right on a high day. This one was, a week or so after. That's okay. But, at highs, there's only bullish news. That's why markets are on highs, right? And obviously on lows, it's the opposite. There's only bearish news. And that's why they're on lows. And that's why everybody is short, because everything is bearish, right? One of the great examples that we like to cite was the low in the U.S. stock market back in, I think it was October of 23.
Yeah.
The low happened on, 23 was all about this idea that inflation was too high. On the low day, you had a huge CPI number. That was the biggest CPI number to come out yet. It was much higher than expectations. The stock market got crushed and then reversed and closed on highs that day. So in other words, if you were bearish because of inflation. And that day, the data gave you everything you wanted to remain bearish. And the market closed up that day. And that was the exact low of the stock market.
Are you talking October 22, the cycle low?
Yes.
Or the recent October?
October 22, I'm sorry. 22. October 22, you are right.
No, that was that huge day, yeah. Massive day down. It went down, put in a new low price, and then closed really high.
Exactly. Yep. On the back of the biggest CPI that we had seen.
And then we got into March of 23, and that's, it's where I interrupted you and thought March, because we had that higher low in price, but it was the banking non-crisis, what we like to look at it as. It was a crisis, but essentially the market ran up super hard from that low. Just looking at that in terms of the structure and the fundamentals, I mean, it seemed like such an easy trade, but the majority were looking for this huge recession to come from the banking crisis. I guess maybe I'll switch gear just a little bit, looking at the longer term cycle.
By the way, even before the banking crisis, and I have videos from that time and people were telling me I was freaking crazy, which is always a good sign for me. If everybody's
Yeah.
telling me I'm crazy, then that's great. These people like comment on my videos and they think they're like, "Oh, you're a jerk. You don't know what you're talking about." I'm like, "Thank you."
Yeah. You realize how much of a good sign this is with the comment section, because it's like the everyday masses. Not, no offense to guys watching, but they hopefully are using the same signs that we're using in the comment section when people are so anti what we're saying at those extremes.
No, I love it. I love it. It's the greatest thing. They think they're like putting me down. I'm like, look, I could, what I mean? It's all about, this game is all about P&L to me. And I've been doing this for a long time. And pretty much every single winning trade I've ever had, by definition, being that I'm so contrarian about it, nobody ever agreed with. So I have no problem with it. Curse me out. Tell me I'm an idiot. I love it. Right. But yeah, early, like you say, early in 23, that's all anybody talked about. The recession was guaranteed and the stock market was guaranteed to go down because of it. Now, I have no ability to predict if a recession is coming. I'm not an economist. I understand economics. I went to school, but I don't have a model that predicts the economy any better than all these other people out there, right? But again, if they're all discounting that in, then the odds trade is to go the other way. It happened to work this time, and it happened to work bigly this time, because what ended up happening was not only wasn't there a recession, but the economy actually grew. So you had to have a huge switch up, right? But if there had been a recession, your downside was very limited, because everybody already knew that game. They already had that positioned in, right? And that's the point about this positioning stuff is, this is where my take's a little bit different about being contrarian. People like to be contrarian price. They say, oh, this thing's gone down a lot, therefore this is what's discounted in. Whereas I look at this positioning, I look at it more like, well, everybody's already short, therefore it's discounted in. I think that's the discounting mechanism in the market, is positioning, not necessarily price. And contrarians get run over a lot fighting price, right? We saw it in the video, in NVIDIA. I always say NVIDIA, but it's NVIDIA, I guess. All last year, the thing kept going up, and everybody's like, "Oh, this thing's gone up too much. I'm going to short it. Oh, this thing's gone up too much. I'm going to short it." I heard it all year, and they were getting run over. And I'm like, "You're all shorting it. Therefore, the positioning can't be extended, because I know 30 people trying to short this for every one person I know that's long it. Right? I don't even need data. I can hear it all day long. Right? All day long. So while price was going up a lot, positioning wasn't there. So therefore, I wasn't fading that.
That brings up a couple of questions which might, viewers might have. One is the positioning. How do you see that positioning as opposed to just hearing it? Because if they don't have that group of people that they're listening to, then how do they know? And that might bring up the Commitment of Traders report, the COT,
Right.
the blue and red lines on your chart.
Right. The Commitment of Traders report is where I use it, and it's for futures only. You don't get it for individual equities.
All right.
So I use that for futures. I don't trade individual equities, but people say to me, like I've had people that when I used to raise money say to me, "What are you going to do if they stop producing the Commitment to Traders report?" And I'll say, "I'll just trade right off of CNBC," because it's the same thing. There are times when, and I've made videos on this many times, I'll be sitting here, I'll have CNBC on in the background, and 20 people will come on over the course of the day, and 20 out of 20 will say the same exact freaking thing, right? All saying the same thing. So when they're all saying the same thing, you can hear it. And you heard that during that NVIDIA run up. You heard it the whole time, right? Oh, it's gone up too much, it's gone up too much, it's gone up too much, it's gone up too much. And until it squeezed them out so hard, and then all of a sudden, at some point in the last few months, you started to hear people say, well, actually, NVIDIA is a good buy here because it's really not that expensive relative to its future growth. And the narrative switched about 2-3 months ago, which is why, of course, the stock stopped going up. But the narrative that whole way up last year was, it's gone up too much, it's ridiculous, it's gone up too much, it's ridiculous. So you have to listen. I mean, you can't expect to make money doing this, or make money doing anything for that matter, or be successful doing anything for that matter, if you're not on top of your game, right? And this game is, I can tell you, I would argue, the hardest game out there. This is a very, very difficult thing to do, right? Now, I would say, in terms of making money, I'd say being like a fireman is harder than this, because you have to go into, a house on fire and save people's lives, right? This is not that. But in terms of trying to make money over time, it's a very, very, very hard thing to do. So if you're not going to be on top of your game, then you're just not going to succeed. You have to be honest. People think it's like a joke. It ain't no joke, man. This is very difficult.
You got the blue and the red lines at the bottom. How do you know when one is too overbought or too oversold, when you could see at the top where you were shorting it with the blue bars are really high, but the red is also really high or really low?
Really low. So the blue are the people we're trying to go opposite, right? With futures, there's a buyer for every seller. So the blue are the speculators, they call them.
Okay.
The red are the commercials. So if you're a farmer, right, you're a commercial because you have the underlying, right,
You got the
asset, right? Whereas if you're blue, you're a speculator. You're probably a trend follower, or you're a hedge fund, or you're a retail trader, or whatever you are, right? That's the blue. And the CFTC differentiates those and produces this data. But you make a good point, because
they're extreme at the extreme.
They're extreme only in retrospect, right? This could have looked extreme here. We didn't have this part of the data, right? Over here, you could have said the same thing, right? Without knowing that it was going to go higher, right? But that's where waiting for the market to confirm comes in. Now, you could have, like on this day, let's say this was a good news day and it was a reversal day, and this looked extreme at this point. Well, you could have gotten short there, right? And you would have gotten stopped. And I would have gotten stopped right here. So, okay, so I took a little loss, right? And then it gets more extreme. So it's always like that because there's always more money. People could always get longer or short or something, right? But I do it relative to history. I index this data from 0 to 100. And that's actually part of something that I release on the Crowded Market Report too, is we give our index data. But even when it's indexed, there's issues there, and it's not perfect. There's nothing that's perfect, right? This stuff is not some kind of magic wand. I always look at this as actually it's a much better risk manager than it is a market predictor. It keeps me out of trouble, right?
Right.
The trouble that I got into earlier in my life as a trader, trying to be contrarian and trying to say, oh, this market's gone up a lot, so therefore I'm going to short it, right? And I got run over because of that. And then I started looking at the positioning and I found this stuff, and it's kept me out of a lot of trouble. Like this is cocoa, right? You can see that speculators were long cocoa here, right? So I could have been shorting arguably here, right? Wouldn't have been working. I wouldn't have been shorting here. I wouldn't have been shorting here. I maybe could have tried to short some here. But right before it took off, these speculators got out of a big bunch of their longs, right? So the old me would have said, oh my God, this cocoa is up so much, right? I'm going to try and short it. But the positioning didn't allow me to do it. And so I didn't short a move that went from 5,000 to 10,000, that doubled in 3 months, right? It kept me out of doing that. And that is just as valuable as anything else, right? Not losing is just as valuable as winning over time, right? Because this way, when you're winning, you're not just making back losses. Like we all go through this when we start trading. We make, we lose, we make, we lose, we make, we lose, and net we get nowhere. I did that for 10 years before I started changing and looking into this, right? It's a great risk manager first, right? And that's important because as traders, that's really what we are as risk managers. I know we want to make money, and that's the idea, right? But really, you want to manage your risk. That's the most important thing, right? Manage your risk first, make money second. I always say, right? And people don't want to hear that. Oh, I just want to make money. Okay. But you have to manage risk first. And this positioning stuff helps do that a lot. It keeps me out of a lot of stupid trades.
Like you said, when you first started, it wasn't about managing risk. It was about trying to make money. And so
I didn't even know what that meant. Risk. What the hell do I have to manage risk for? I'm going to kick the shit out of the markets and I'm going to be a millionaire. I mean, I was young when I started, and I was working in the markets and in Hong Kong, and there was a massive bull market going on. And, I was like 23 years old.
Is that the late 90s? Mid-late 90s?
Yes, exactly. 92, 93, I started. And the Hang Seng Index went from like 3,000 to 12,000, and it was a massive bull market. And I was just young and dumb enough to be leveraging into that. And, before you knew it, I was a 25-year-old kid driving my Porsche around and counting how many billions of dollars and how George Soros was nothing compared to me, right? And then I learned. You know what I mean? When I couldn't afford to pay for the garage, to put my Porsche in, um, you learn. And I know everybody thinks it won't happen to them, but I assure you that it will. And that's fine because it's a necessary part of learning. The worst thing that happened to me, and I think that happens to a lot of people, is you make a lot of money when you start because then you think you're infallible. The best thing that can happen is if you lose money when you start, because then you can make the decision, do I really want to figure out how this works? And do I really want to figure out how to make money? And if you lose money when you start, you're losing a little bit of money because you're usually starting with a little bit of money and you have plenty of time to get it back, right?
Right.
Those are the lessons. Again, people want to think that trading is different than anything else. But if you think about anything that you do well, right? I don't care what it is. Maybe you're a great rugby player, right? Maybe you're a great guitar player, whatever it is. It didn't just come, right? You freaking worked your ass off at that, right? And you learned lessons and you made mistakes along the way, right? And you had an injury and you had to overcome the injury. You had to decide if it was worth it, right? All these things. There's no difference. Trading is not some kind of magic. It's just the same exact thing, except probably harder. There's a hell of a lot more good guitar players than there are good traders.
And they're enjoying
I
themselves.
unfortunately am not one of them.
Guitar player, that is.
Huh?
Guitar player, that is. You're a good trader.
I'm not. I'd love to be a good guitar player, but I unfortunately am not one of them. Picked it up late in life, and I quite frankly don't have the motivation to put the time in. It's just for fun, And again, I say that with trading too. If you want to trade because it's fun and it's a hobby, okay. But I don't know any hobbies that I make money out of. I play guitar; it's a hobby. I don't make money out of it. I got to buy guitars. I got to buy amps. You know what I mean? I got to buy guitar courses. I don't make money on it. It's a hobby. It costs me money. And if you want to approach trading as a hobby because it's fun, and hey, Jason, I'm not so serious. I don't need to be a market wizard. I just like to punt around the market and have fun. Fair enough. But just don't expect to make money over time.
It's an expensive hobby. It'd be like,
You can be small and just kind of do it for fun. It's just like people gamble, right? They go to a casino and they know that they're
the
not
sport
really
betting apps now. Those things are mental.
or bet on the sports. You pretty much know you're not going to make money over time, but it's kind of fun, right? I can't do that because I consider what I do to be a form of gambling. And so therefore I gamble all day. So if I'm going to then go out and gamble with the rest of my time, then I have a serious issue. That's how I say it. Like I go to casinos, I won't even sit down at a table, man. Like I might play poker just because I can sit there and play poker and I can spend all night and, put $200 down and I'm good enough at poker that I can get through, 8 hours and lose $200, right? And, that's entertainment. I consider it entertainment. It's fun, but I don't sit down at the blackjack. I can't stand that shit.
I'm the same. I don't even go into the casinos. I hate it.
Yeah.
I don't see it as a form of enjoyment whatsoever. I'd rather get my sleep or do something else.
No, it's pain. It's total pain for me. So because it's hard. You go, you're going to lose.
Yeah, and the type of people that are there too. Like I don't know if they see it. That it's like entertainment. I'm like, this is just you're going to lose.
Yeah,
it's stacked against you. Like at least, I mean, the market's not necessarily stacked against you because you can find ways to do better at it. But literally, the casino is stacked against you. So what's the point?
I mean, it's just math.
Yeah,
very, very simple math. So whatever. I can't do it, but look, some people do it, and I think they do it for entertainment. So okay.
I've got heaps of questions for you, but I don't know how much time you got.
Yeah, I got all day, man.
All day. Simple strategies that actually work, yet most don't believe they do. Here's some risk management. This is going to work. And most were like, screw this. I just want to make money.
There's certain rules. There's a rule book for trading. They're against human nature, right? Such as don't buy laggards, right? People want to be like, oh, everything's gone up but this, so I'm going to buy this. Don't do that. Buy leaders. Don't buy laggards, right? Laggards are lagging for a reason. Leaders are leading for a reason. You want to be in the leaders, not the laggards. It's a very simple concept, right? That's hard to do. Why would I buy what's already up when I can buy what's down? We just found out. Google trading on pretty much all-time highs today, coming into the earnings report today. Intel trading like shit coming into earnings today. They both had earnings today, okay? Google is up 15% overnight on all-time highs. Intel is down 9% after earnings on new lows. You don't buy the laggards, man. There's no gift. You know what I mean? The market doesn't offer gifts. So I think that's a very simple sort of rule that people need to get used to. That's hard. You mentioned the Market Wizards books. Forget the one I was in, which was a few years ago. The first two Market Wizards books that came out, which was in the early 90s, Market Wizards, and I think it was the second one was called New Market Wizards or something like that. If you read those books and read them again and read them again, the rules are right in there, man. The rule book is right in there. They'll tell you stuff like that, right? Buy leaders, not laggards. Cut losses, ride winners, right? These are all old adages, okay? But they're old adages for a reason, you know? They work, right? And you have to think about this stuff, not about this particular trade, right? That's, I think, something people get very caught up. I have a trade on right now. It doesn't really mean very much to me. It might win, it might lose. Okay. I hope it wins. But if it loses, okay, I cut my loss. I'm on to the next one. This trade can't mean anything, right? It has to be over a long period of time is what you're doing, creating money. And people get caught up in that. You're not going to make every trade. So get used to taking losses. Cut your losers, ride your winners.
Two total opposite things when it comes to crypto. I mean, you're probably starting to see that, like, hear it on X, where it's people will buy the stuff that's down, that's still down after the market's already rallied. So that's a big mistake. And then
they do it all the time. I hear it all the time. Bitcoin runs, Ripple or whatever doesn't, right? And so
I didn't even have to tell Jason to talk about XRP. I cover that in my video every other day. It's absolute garbage. Go on.
I don't even trade crypto, so I don't even know what the hell the thing is. All I know is this kid I know that does some work for me around the house keeps telling me and has been telling me for 6 months to buy XRP because it's going to rip and I'm like, dude, it's not going anywhere. Wouldn't you have been better to just buy Bitcoin? You know what I mean? Oh yeah, but this one's going to go. I'm like, well, I don't know that you, okay, know any better than anybody else that XRP is going to go. And I barely know what XRP is other than I'm a Grateful Dead fan and Ripple's a great Grateful Dead song. It's actually one I can actually play on guitar. Other than that, I don't know what Ripple is. But I'll tell you something.
They're chocolate cookies in Australia. Nice chocolate cookie. Anyway, go on.
Oh, it was a chocolate cookie. On this, there is a COT, I have to say, for Bitcoin and for, what's the other one called? Ethereum. And I got to tell you, it's worked really well. People argued with me when I started showing it on Twitter, and guys were like, oh, that shit doesn't work. You old guys don't know anything about crypto, and that shit doesn't work for this. Okay. All I know is I don't know anything about crypto. And the COT gave us a huge buy signal late last year and gave us an exit signal, not a short signal, but an exit signal about 3-4 weeks ago. So this is the Bitcoin commitment to traders. So let's look at what we were talking about before. Over here, it would have said it was a short. So the date on there is mid-September, okay?
Right.
So these guys are too long, these guys are too short, right? But then here, these guys got massively short starting in about the beginning of December. So we were getting buys in the beginning of December in Bitcoin. It broke out, right? And everybody got shorted into the breakout because they were so sick of this thing going down, right? And they wanted to take their profit. So it broke out. They got short into the breakout in the middle. It's basically the middle of December. Middle of November, early December, right? So we were getting a buy there. And then you can see we rode that all the way up until about 3 weeks ago when this stuff went neutral, which really was right at the freaking highs, right? Very close to the highs in here. So it was above 70 at that point. So, I mean, it was a pretty good trade from December's, around 38 to 70 in what, 3 months, was a pretty nice trade.
Yeah, no, it's pretty sweet, especially against the herd at the time, because there were a lot of people saying that they're going to short this thing as it broke out of 30 grand.
And it shows, that's what I'm saying. It shows up right there. So if you're paying, that gets to the exact point of what we were saying before. You're paying attention because you trade this actively, right? You are hearing people say that.
Exactly.
And you're seeing it in this data. So it's matching up, right? So this is confirming what you're hearing. There's always that thing where people say one thing, but do you know what they're actually doing, right?
Yes.
You're hearing it, but you're also seeing it in the real data. Here you go. They actually are selling a shitload here. So the risk reward is to buy this thing. And that one worked like a freaking home run. And you can go on X when I was saying this. And I don't trade Bitcoin, man. I couldn't even tell you what the hell Bitcoin is. Okay. But I was on X saying, man, I'm just saying. And all these people were freaking cursing at me. You're a freaking old man. You don't know anything about Bitcoin. Your shit doesn't work with Bitcoin. I was like, okay, fair enough. Maybe you're right. You know what I mean? You are right. I am an old man. I don't know shit about Bitcoin. And I don't know if this stuff works for Bitcoin because it hasn't been around long enough. The data doesn't have a long enough history and all that. But I know it works for just about every other market that I trade. So why would Bitcoin be any different? Pretty nice trade from 38 to 70 in 3 months, right?
So now you're saying that there's no short on it, but it was definitely an exit a few weeks ago
An exit, correct.
because the short.
It's an exit to me for how I trade because I'm trading from they're super short to they go neutral because that's my edge, right? My edge is they're super short. So I want to go long. So when it goes up and it squeezes those shorts out, it's going to rally, right? As they're getting squeezed. Once they're squeezed out, there's no more edge for me. Doesn't mean Bitcoin's not going to keep going up, right? Maybe it's going to go up until they get super long now, right?
Right.
But there's no edge either way for me here, right? So I take what my edge is and I run, from
So
here.
the only time you would go short from this is when they go super long.
Super long, correct.
If it's neutral the whole way up, there's no trade in it for you.
For me, doesn't mean
Yeah.
it's going to go either up or down, right? And depending what it does, depending how these people react to it, then there becomes a trade for me. But I don't trade that middle ground. I trade the super extreme to middle ground, and then I'm out.
What do you do with your profits? Does it just remain in the market, or do you have another long-term investment strategy?
So I think it's an important point that also people that are new to trading need to understand. And I learned this the hard way. What you want, obviously, what we're trying to do here is grow our wealth over time, right? And the way to grow your wealth over time is not by sitting here and trading all freaking day. All right. You have to have multiple streams of non-correlated income streams. That's really what you want because that's what's going to make you money over time. I know we all want to be the next Stanley Druckenmiller and just make 45% a year on our compound 45% a year on our money every year and all that. But there's a very high probability that's not what you're going to be. Okay. So you need correlated income streams. So what's a non-correlated income stream? So so you have to have, and I didn't do this, all right, until very late in life, and I'm a much poorer man because of it. You have to have that dollar cost averaging stock thing. You got to have it, okay? Because over time the stock market goes up, all right? That's just a fact, all right? You made more money buying the 2008 crash than you made shorting the 2008 crash, right? I know people that shorted in 2008 and made a bunch of money, but the problem was all the reasons that they had to short in 2008 remained for the next 4 years. So they were short the whole way back. So they gave that all back, right? You made more money if you had been buying that dip in your dollar cost averaging account than you ever made shorting it, right? You have to have that return stream. Then you have your real estate because you own your house or whatever, right? Which is a big investment for people and a big part of their net worth, right? Now that's probably correlated to the stock market, right? If the economy is going to grow, the stock market is going to go up and the price of your house is going to go up. But you have to have it because if you don't, you're never going to afford a place to live in, right? And it's the same thing with the whole stock thing. If the economy grows over time, which certainly it's going to do, you have to participate. Otherwise, you're falling behind relatively, right? So you need to have those things. So now how do you get something that's non-correlated? Well, trading is a non-correlated thing, right?
So those that you just, sorry to cut you off, those that you just mentioned are the non-correlated, the long-term vehicles. Have DCA into the stock market, DCA into your real estate, if you would call it that, or basically just buy your property. And then go to look for a business that produces you money. In your case, it's trading.
Something that is non-correlated. I mean, most businesses are going to be correlated to that too, because you're going to do well in business if the economy is growing. So where do you get these non-correlated income streams? Trading can be one of them, right? Especially if you're going long, short, and all that, right? Trading can be a non-correlated income stream. My business, by the way, is based entirely on that. Okay. The only reason people give me money, institutions give me money, is because my correlation, my return correlation to the people that give me money for the most part run fund of funds, which means they take in a bunch of money and they allocate it to different hedge fund strategies, right? My return stream is 0 to negatively correlated to almost every hedge fund stream out there, right? So they need me in there, right? That's what I do because, and if you think about it, of course it's going to be negatively correlated because I'm buying when everybody's short and I'm shorting when everybody's long. So clearly it's going to be non to negatively correlated, right? And that's why they allocate me money, right? If I were a trend follower and I was sitting here like this in my house, they wouldn't allocate me anything because they got a million trend followers that they can allocate to who have billions of dollars under management and huge research teams and incredible offices and the whole thing, right? They allocate me money as a one-man guy sitting here because they can't find this negative correlation anywhere, right?
Those other funds aren't allowed to do that, though, are they? If you got into the big, if you're in Wall Street, they're not allowed to just go against the herd all the time at every extreme.
They can if that's what they want to do, but they don't, right?
They don't.
I mean, if that was their strategy, they could, but it's not their strategy. But it is my strategy, right? So that's why people allocate me money because of this concept. These are institutional investors that understand the concept of having non-correlated income streams. Ray Dalio, who runs the biggest hedge fund in the world, arguably, or one of the, he talks a lot, big macro game and all this stuff, but I know people that work there. All he had was 20 strategies that had non-correlation, right? If you can get 10 strategies, 10 to 15 strategies with positive return expectations and non-correlation, you put those on, you go to sleep for 30 years, you're a billionaire. That's all there is to it, right? And that's basically what he did. He didn't go to sleep because he had to go out and make it sound like they were doing something macro and go and raise money and, raise billions of dollars and all that shit, and do the marketing thing. But that's all they did, man. They put a bunch of non-correlated return streams together and they ran them for 30 years and they had great returns and he's a freaking billionaire. There's no magic in the trading. There's magic in the diversification of return streams. So
is it hard to get those diversifications within the same
kind of
industry?
It's so hard that these institutions give me money. Look at me, man. I'm sitting in my house. Nobody does this. You know what I mean?
You don't shave. You put beanies on.
That's right. I have nobody working for me. Okay. Yeah. And I did start a hedge fund. When I left the big hedge fund I worked for, I started a hedge fund that was big and I hired all these people and I was going to become the next whatever. And it ended up being a nightmare. I didn't like it. I didn't like having people work for me. I didn't like having all these people count on me. So I shut it all down. And I started this one. And I said to the people, they said, oh, well, how much money are you looking to raise and all that? What's your capacity? And I said, it doesn't matter to me anymore because I don't have any expenses. All right. I've saved my money. So I don't need the money to live off of. And I don't have any expense. I don't have to pay people. I don't have to do all that. So, I don't accept any. I can raise a lot more money. I have people come to me all the time, but I don't take any more money because I don't want. It's not worth the headache to me. But that's why they give me money, despite the fact that I don't shave and I wear beanies and you know what I mean, and I curse and I do all this stuff and they give me money because of this non-correlation thing.
Good to hear it from your experience, an extra 20 plus years to mine, and just see is that the right path? So hopefully, guys have been picking up from that and putting it into their own plans. You said you don't really get into the macro thing. We talked about the economy and I've heard you bring up stuff about the recession, especially through last year where everyone was talking recession and then it just didn't happen. Do you ever look at the longer term stuff like, oh, look, we are going to be running into a major collapse, probably a collapse we haven't seen since the GFC, blah, 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 that sort of thing? Or do you just leave that and if it happens, it happens, and if not?
No, I love it. I talk the macro game all the time. Okay, I love it. I love it. Okay. But I don't trade off of it. Okay. And I do it a little bit differently because I talk the macro game looking at what I see in the positioning and therefore where I see risk reward. So right now, the biggest positioning right now, okay, is long the US dollar, right? People are massively short these European currencies, right? Because everybody has come to the conclusion that no matter what, the US rates are not going to come down as quick as the European rates. Okay. That is absolute consensus out there right now. So if the currency game is a game of rate differentials, right? Then they're all going to be short euro, and they're all going to be short Swiss, and they're all going to be short Aussie, and they're all going to be short all these currencies, which is where they are. So I look at it like that. That means to me the dollar is going to go down. So let's start with that, and then I'll build my macro view around that. If the dollar is going to go down, what does that mean? Well, it probably means U.S. rates are going to come down faster than people think now. And I haven't been of that view. You can go back and look at my videos. I've been of the opposite view of that for a while now, right?
Definitely. We're talking interest rates here where they're at 5.5%, and it looks like they've all come up to 5.5% and potentially a hike.
So now it's time. Exactly. Whereas 4 months ago, they thought they were going to cut 6 times, right?
Yeah, they'll cut every meeting. It was going to be 8 months.
Right.
8 cuts.
And now they've gone the other way. So now I'm going the other way. And the positioning has gone the other way. So now I'm going the other way. I start with, I think the dollar has the potential to go down a lot. What's going to cause that? More interest rate cuts in the U.S. than people are expecting now. So that's my macro view here.
We've got to squeeze a little more to the upside, or is it you think it's perfect where it is?
I don't know. I don't know the timing. You know what I mean? We had some data today that was kind of shit, although the inflation side wasn't, but the growth side was. But I never know the timing, but I wait for the market to tell me when the timing is, right? But that's how I build my macro view. So my macro view from here is I think rates are going to come down faster. Now, if I had been trading that macro view, and I only started making this macro view in the last sort of 2-3 weeks as all this stuff has shifted, well, I would have been getting long bonds and I would have getting my ass kicked because bonds are on new lows. Okay. And that's why I don't trade the macro view, right? I'll build the macro view, right? Like I said, last year I built I kept saying last year, there's going to be no recession. People are like, how the hell do you know? You know what I mean? It sounds interesting. And it turned out right. Terrific. Doesn't always turn out right. I go back, my newsletter that I distribute now is something I've been writing for myself for 20 years, right? That's how it started, right? And I do that to have a record. And I go back and I look at it. And sometimes my macro view was spot on. And sometimes my macro view was absolute crap. Okay. But it's interesting to talk about and it's interesting to build it. And I like to picture it in my head. Where is this trade going to work? Right. Which can be dangerous. That cotton trade that I showed you before, I couldn't build anything in my head that was going to make that trade work. But I still put it on and it worked. You know what I mean? Usually the trades that work the best for me are the ones that I can't make any sense out of, which is why I have a process and I follow the process. But in my mind, how's this dollar trade going to work? We're going to have to start slowing down in the US. Everyone's already given up on recession now. So now I think there's a higher probability of there being recession. And should that happen, the dollar is probably going to come down a lot and these other currencies are going to go up. So that's kind of my macro view and that's how I build it. But I don't trade on it. I trade on my problem.
Because you don't know when the timing could be. You want to wait for the market to prove the move.
Wait for the market to prove the move, which hopefully will be tomorrow with some of these currencies. Hopefully we get a nice big number. I mean, I'm already long like the Canadian dollar, proved the move already for me. I never know. Not only don't I know the timing, I let the market tell me the timing. I also don't know the path. I have God knows how many trades that I've made over that I have all history of, and then I study a lot, and the path is different almost every freaking time. Sometimes it goes straight in my favor and just runs away, and it's great. Sometimes it goes up and pulls back and goes up and pulls back and goes up and pulls back,
But you're not saying that this time is different. You know that old saying.
Yeah, no, I think it's this time is the same. It's always the same. I never know. I never know the path. And the world scenario, I can build that one too.
I was going to ask you, what do you think is the opposite to what you just outlined with the dollar and the interest rates? Or is that overthinking it, trying to be too smart with the market? Like, is there ever a world where the dollar could go down and interest rates still go up?
Yes.
Okay. Lay it on us.
That's the world that it's very dangerous to be bearish, okay? Because it doesn't work over time. Of course, until it does. But that could be in a year, it could be in 10 years, and it could be in 40 years, right? I can sit here and make a very credible case, and I've done it. I've made a video about it somewhere in there. I can make a very credible case that this Ponzi scheme is going to end, and it's going to end ugly. I can sit here and talk about it. And when I make videos of it, they get huge views because everybody loves the bear porn. You know what I mean? You have to be wary of it because it very rarely works. And the market will tell you if it's going to be the case anyway. And what the market will tell you is, look, it's all about printing money. We know that. Okay. So the market will tell you if they get to a point where they have to print money again or lower rates again because they're scared or whatever, and it doesn't work, then you run for the freaking hills, right? Then it's over, right? If the markets, I can't see them cutting rates if the stock market, if the S&P is trading at 6,500 and gold's at 4,000. How are they going to cut rates at that point, right? I just can't see it. But if the S&P goes to 3,500 and gold goes to 2,000, we can talk about them cutting rates, right? If they cut rates there and that doesn't work, and by doesn't work means the dollar goes down, the bonds go down, and the stocks go down at that point, then we can start talking about the end of the world and the Ponzi scheme ending. There's no doubt in my mind this whole thing's a Ponzi scheme, but it always has been. So what's the difference? To predict that it's going to end, go get your bunker and all that shit, it's just it's a silly game. And the market will tell you, believe me, the market will tell you if that's what's going to happen. The market, if you listen to the message of the market, it tells you all you need to know. Don't try to predict it. And predicting that end of the world, end of the Ponzi scheme thing is the worst prediction there is, right? But it will tell you if it's going to happen if you're paying attention.
Did you see anything like that in 2006-7? End of the world, mostly 2007. Signs that the world was ending.
No. I don't really think you did, other than the tape obviously was started to be very, very bad, right? This is the thing. Like when that all happened in 2008, and they came out and their answer was, let's print a shitload of money, right?
Yeah, we're talking September, October 2008 now.
Right. So let's print it. Well, October is when it all freaking went down, and they all got together in like November or whatever and said, how are we going to save the world? Let's print a shitload of money, right? And I worked at a big hedge fund then that had a bunch of people, and we used to have meetings with all the portfolio managers to discuss. And the consensus view was that was bad, right? They were printing all this money. It was going to be hugely inflationary, and it was going to screw the whole system. Well, as it turned out, that wasn't the case. It actually did save the system, right? And I saw a similar thing when I was in Asia during the Asian crisis in 97, I think it was, right? Where the Thai baht blew up, the Asian crisis happened, everything crashed. And I was trading Hong Kong very actively then. And the Hong Kong government, it was really the Chinese government, came in and bought every single stock on the Hang Seng Index, okay, for 2 weeks. Every single stock, all you wanted. They were up on the bid. All you wanted to give them, you could give them. And the consensus at the time was that was bad, because everyone had the takeover on their mind. China was taking over Hong Kong, and this was official socialism now, right? And it was ruining Hong Kong. Hong Kong was always a bastion of capitalism, and now it's turning into a socialist thing. And that was seen as bad. And you know what? That was the low tick of the stock market. Stock market was up like 50% in the next 2 years. And those guys made a huge amount of money doing that. And they sold all those stocks and they distributed it to every working person in Hong Kong, which was great. It was the same thing in 09 or in 08. Everybody thought it was bad, and it ended up working. And now since then, now we have the thought process has completely flipped, right? Now it's, oh, the bailout's good. If they print money, it's good because that's supportive, right? They hated it before. They love the idea now. So that flips the odds that it works next time, right? Part of why it worked last time was because everybody was short the idea. So therefore, they all got squeezed. And this time, if the markets go down and they decide to print to save it and everybody buys because of that, what's going to happen when it makes new lows? What are they going to do? They're going to print more? And then what? You know what I mean? That's the massive bearish case for me. And I don't hope we get there. But if we do, I plan to make a shitload of money.
But you don't have a timing on that. You're just like, no.
It could be soon. It could be this freaking year, man. But it could also be 20 years away, right? I mean, let's see. I feel like if the stock market were to go down, if it happened this year, God forbid, okay? Because the stock market went down 20% in the next whatever, 3-4 months. Okay. And people started panicking. And they're looking, and now the Fed can cut rates. I keep saying everybody wants them to cut rates. You want them to cut rates? Watch out, man. Okay, because
Yeah.
they're going to be cutting rates. They ain't going to be cutting rates at, like I say, at S&P 6,500. They're going to be cutting rates at S&P 3,500. Okay, if they cut rates there, and that doesn't work, then I think you can kiss the baby. Especially now, because especially if they haven't, if the inflation thing hasn't been tamed. You know what I mean? They're going to cut rates to save the stock market when inflation's not tamed. Forget it, man.
Recipe for
It's
disaster.
a recipe for disaster. And again, don't trade off of this. Okay, I'm not trading. I'm
Yeah.
not trading off of this. Okay, but I always have it in the back of my mind because I do believe that this whole thing is a Ponzi scheme. But Ponzi schemes can last a while, in particular when they're being done by a government who prints their own money. Right, it can last forever, theoretically.
Basically, yeah. Which I mean, look, we could go into so many things. You got Ray
Yeah,
Dalio's idea of the US coming to the end and China taking over, and
yeah.
it's like, well, I don't see who the next world reserve currency would be if we in fact go to another world reserve currency. I've got no idea.
It ain't going to be China. I wouldn't think.
No, I doubt it.
They don't have.
Everyone thinks it's going to be that, so I don't think it's
Maybe
going to
in
be that.
50 years, but not today. I ain't putting my money in renminbi. I mean, you know what I mean, or whatever they call them nowadays. Like,
One, yeah,
yeah, you know what I mean. Like, at the end of the day, there's not the trust of the government there, right? You're talking about a communist government, right? Not that there should necessarily be the trust of the U.S. government, but there is. Okay, you got to build a lot of trust to have the world reserve currency, I think, and they don't have that just yet. So I don't know. These are all sort of esoteric points and very philosophical points and all that. And I'm no expert in any of this stuff. Anyway, that's the mega bearish case, and I always have it in the back of my mind just in case.
I reckon it's not a bad place to wrap up, and we pick up again
Sure.
in the not too distant future. If you're happy with that,
Anytime, man. Anytime.
awesome. All right, I'll say thanks very much. Links will be in the description. I hope you guys have enjoyed our chat. You learned something from the beginning, and then got some enjoyment from the bear porn at the end. And apart from that, we'll pick it up in a short while. Thanks again, mate.
Great, man. Thank you.